What's going on, ladies and gentlemen? Welcome back to the channel. My name is Camilo from Trending Waves. I hope you guys are well. So what we're going to do here today is review the SPY and the Triple Q's ETF. We're using our preferred method of technical analysis. I am going to show you guys the levels that I spoke about in yesterday's video that are a must-hold zone. Now, if you're new to the channel, guys, what we do here after the market closes is we review alternate versions of these counts, one suggesting bullish count and the other one suggesting a bearish count. Okay, guys, so before we dive into the analysis, give this video a thumbs up and subscribe to the channel. So we already know, right? This was the entire correction from March to February 24th low. Or sorry, not March, January to the February 24th low. Okay, a W, X, and Y, accomplished correction in the SPY. Now, this zone here was a little bit complicated to track because we will normally see a wave one, a pullback to a 50% retracement of the entire impulsive structure, and then we go. However, we saw a deeper than expected correction to the 786 on the wave 2. Okay, let me turn this. Actually, the 786, I deleted it, so let's do this together. So we take a right here, right, our retracement from the low to the high of wave 1, and we turn on the 786, which was the deepest correction for a wave 2, because after that is a 100%, and that'll become an invalid count. So the 786 in this wave 2 held at 416.86, at which point we saw this rally come out. So let's dive down to this zone, okay, over here, and let's count these waves to see whether or not we potentially see more upside to complete the wave 3. So taking it down from the 1 hour to the 15-minute time frame, okay, our wave structure will suggest the following. So out of the wave 2 low on March the 14th, we made our first wave 1 high, which we broke the resistance trend line originated from the January highs, okay, and it was confirmed several times, holding price action low, as you can see here, okay, holding it as resistance. Now, we got our first wave 1, broke out of the resistance zone. Wave 2 failed to hold it at 50% retracement. Then let me backtrack. We broke out of resistance. We held it briefly, but broke below it. But we found support at the 50% retracement. Now, if I take a quick trend line, or, let me do this trend line here so you guys can see. This 50% support zone was areas here of high resistance that was rejecting the price action, okay? And if we zoom out further back, we see that it was the zone of the previous wave 4, and then some resistance zones here and support zones here. So this zone, this area was of critical view for us to pay attention to, which we did over at Trending Waves. So we kept track of this and we started labeling our counts. So this was a potential wave 2. Now this was an extended wave 3. Now where did this wave 3? I'm going to hide these levels here because it's getting a little clustered. All right, so this wave 3 came into a resistance at, let's take a look at the 1618, just shy of the 1618, guys. Okay, just shy of the 1618, and then we sold off. Now what we have here so far, guys, is we have price action letting us know that perhaps wave 4 has completed here. Now wave 4 came into a 23.6% retracement of the entire wave, wave 2 and wave 3. Okay, we saw a bounce here. Now yesterday's video, these zones still hold true. Now we're not out of the woods just yet, okay? Although we broke the previous high here on March the 22nd, wave 4 is still likely that this is an A, B, and C, okay? So what do I say? That before we go there, let's take a look at the zones that we must hold in order to maintain this bullish count, okay? Because if these areas fail to hold, then it is likely, ladies and gentlemen, that we are in a bearish count, which we'll review here in just a moment. So the first zone here, which we reviewed in yesterday's video, is the 440.56. Why do I say that? Because it is the low of its previous wave 4 of the lesser degree. Now, if we review here, right, this is the wave 1, wave 2, 3, 4, and 5 to complete the wave 3. All right, now we got 3 waves down. We have evidence of a 3 wave down, okay? And it is likely that this is all she wrote on the wave 4 because it pairs up in time and in magnitude to this wave 2 pullback, okay? This is a directional pullback. This is a sideways pullback, okay? Guideline of alternation. Now what I'm looking at here, guys, and by the way, we took a trade on today over at Trending Waves for the SPY to take us up to the 450 zone, because this will be an extension in the wave 5 from the wave 1 to the wave 4, which is inappropriate. It is a safe bet, okay? It's a safe bet because we can go all the way up to the 1618, but we're not going to be greedy. So if we zoom into this price action, what could hold us down? Let me take a look real quick here. So this can still be A, B, C for A, 3 waves back to B, and then we get the next leg low on the wave C. So what zone should we be looking for resistance to break? Now, the way we do that is that we're going to take a retracement from the high of wave A to the low of wave A, and we're going to go look for the 100% extension and the 1272. Okay, as you can see here, right, if during the future session we are not we're not able to break above this previous high here and continue, if we start seeing a fade lower, then it is likely that we're still in the wave 4. Now the 450.53 was a zone of high resistance, and then our next level to watch is 452.39. Now that zone comes in confluence with what levels in its history here, and we're going to take a trend line, and we see that it was zones here, okay, between February the 3rd and the 8th. Okay, it was support here on December the 20th, and then it will support here on December the 3rd, and support here back on October the 21st. Okay, guys, so obviously that's an area that we have to break. Now, by the looks of it, the way the structure is and the way the RSI is shaping up to be on the 30-minute time frame, for instance, right, it is looking like this is the wave 4 completed, and now we're hitting up higher. Okay, normally what we see on the wave 5 is we start seeing divergence from the previous RSI extreme. Okay, so it is likely that we are in the wave 5, so this is a good zone to take a trade on in order for us to profit from further a move to the upside. Now, if we fail to break low, if we fail to break higher and we start breaking lower, it's okay. We will add more to the position, because that'll only mean and confirm that this is an A, B, and C, and we're still gonna head on higher anyway. So we may have been a bit early, but based on the way market closed today, it is likely that we see action to the upside. Okay, guys, so let's take a quick look at the bearish count, and you're gonna ask yourself, so at what point do we say let me just hold on, give me a second, guys. At what point do we say which count will be valid, and how do we know? So I'm going to review that with you on the bearish count. Give me just a second. Let me organize this for now. Let me hide this, and let me turn on our old count too. So it is looking like this is already an invalid count, because we weren't supposed to see price action. Not that we weren't supposed to, but it's becoming less likely once we break above the 1272 in the wave C. Okay, so A, B, and C, the 1272 usually serves as a high level of resistance, but we're breaking up higher. However, the wave B has a resistance at the 618, which is 452.14. Okay, now if we start seeing a rejection, okay, if we start seeing a fade, the zones that are still in the bullish count are still valid here in the bearish interpretation. Which zones are those? The following zones are the ones I'm talking about. So the previous wave 4 high, sorry, the previous wave 4 low, and the wave 1 high. Okay, this zone has to hold on the bullish count in order for the bearish count to remain invalid. Okay, guys, so A, B, C to the B. All right, this is still evidence of a 3-wave. When we take a look at the 1 hour time frame, we see that this is still the case, right? A, B, C to the B, down to the C to the wave 4. Okay, guys, over to the Qs real quick here. The Qs bearish count, same deal, guys, same deal, right? We're still holding underneath the 50% retracement, 1, 2, 3, 4, 5 to the wave C. If these zones fail to hold as if this holds as resistance and we start fading lower, and if this zone does not hold between 346 and 338, then it is likely that this is the case. However, our preferred interpretation suggests otherwise. Our preferred interpretation here in the Qs is suggesting that perhaps this is the A, B down in C to the wave 4. Okay, and where would that likely be? Let me hide this. So we'll take a retracement from the low to the high. Actually, no, that's not what I'm doing. Here we go. So a 786, actually it is the 100%, right? Oh, the 1272, there you go. So if this zone, the 1272, 359.65, fails to achieve its intention of being a resistance, right, and we start fading lower, then we have to watch for a 5-wave pullback into wave 4, right? 3 waves up, 3 waves down, 3 waves up, 5 waves down for 3-3-5 pattern. And then we have to watch for the previous wave 4 support and then the previous wave 1 high, because obviously this is the last level of resort. If we fail wave 4, the one I'm moving around here, cannot retrace beyond the territory of wave 1. Whew, that was a handful. Sorry about that, guys. I'm in a rush. I need to get out of here. So thank you so much for tuning in. Really appreciate you, and give this video a thumbs up. Looking forward to new faces over at Trending Waves. Take care. See you tomorrow.